I want to bring back Desjardins from Deloitte Canada to talk about this issue, just because we are at a point where it doesn't feel like, in political circles, we're talking about inflation anymore. We seem to be talking about these interest rates, how high they are, and how they're stretching Canadians right now.
Yeah, but having said that, Canadians are feeling the bite, of course, from inflation. When we're looking at inflation expectations, for example, when Canadians are asked, where's inflation today? They say it's 7%. That was in the Bank of Canada survey at the end of June. And so what are they looking at? They're looking at food prices, and food prices are elevated. So from the bank's perspective, they have one tool and they have a target, and they are working hard to get those two aligned.
Yeah, the supply picture to actually match up with the demand picture. One of the interesting things, though, is here we are talking about an economic data point this morning, a contraction for the economy in the second quarter. You're going to hear, a number of economists on Bay Street suggest that we might see the Bank of Canada on hold. But a data point like this could also be used in political circles. Does the central bank find itself in a difficult game on that front if the fight against inflation is technically not over, and the commitment perhaps to being done with rate hikes, or even showing, signs of cutting interest rates might be also perceived as caving to political pressure?
Oh, I don't think so. The bank has been in it for the long game, right? They have been raising rates for 16 months. They are looking at getting the economy to slow sufficiently. In a perfect world, yes, it would just slow, price pressures would come down, and all would be good. But sometimes normally there'd be economic pain associated with that. And so I think from the bank's perspective, it wouldn't be perceived that they're caving to anything. They know what their target is. They're very articulate on that point. They really want, I think, to get inflation expectations aligned with reality and where they want to get in terms of that 2% target. And when you look at those surveys, it looks like Canadians think, oh, that'll happen in 5 years. Well, the bank wants Canadians to get the message that it's going to happen, and it's going to happen before a 5-year term.
I guess just going back to what we were covering before the break, the fact that when you start looking at all the numbers, that it's not such a stretch to say we technically might be in a recession.
Sure.
How far are central banks willing to go? I don't want to editorialize here, but I think there's a lot of people, including market participants, who never thought the central banks would go as far as they've gone in the first place, because we've lived in a low interest rate environment for so long. And now they keep talking about, no, we're in this new era. I spoke a little bit with the former Bank of Canada Governor David Dodge about that very issue yesterday. But as soon as we start talking about a recession or a contraction of the economy, how far are they willing to go in that fight against inflation?
Well, that is their target. Yeah. And so we know it's sort of the end-all and be-all. Is it going to be all kinds of havoc for the economy? Perhaps not. Perhaps they are going to have very mild declines. In fact, that's what we have in our forecast. It's not a deep, dark recession. It is something that could likely be short and shallow. The big thing here, of course, is the labor market. It continues to be extraordinarily strong. We're seeing actual real wage growth because inflation's coming down, but wages are not coming down that much. So that's another dynamic we'll, of course, be watching. We'll get the data next week.